Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen, and thank you for taking time out of your day to watch this stock market update and industry sector review for the week ending Friday, February 23rd, 2018. Before I get into the stock market charts, I'd like to begin with the quote of the week. And this week's quote is from John Mason Brown. And if you don't know who John Mason Brown was, John Mason Brown was born 1900, died 1969. He was an American drama critic and author. He was graduated from Harvard College in 1923, and he worked for the New York Evening Post from 1929 to 1941. John Mason Brown once said, "A good conversationalist is not one who remembers what was said, but says what someone wants to remember." Very wise words from John Mason Brown. Okay, the charts you're about to see are as of the close on Thursday, February 22nd. There's been plenty of volatility here and there the last week. Haven't made a whole lot of progress in the stock market over the last week. Pretty much a sideways move, but we did have that trading holiday on Monday, so no stock market activity on Monday. But let's go ahead and see where we are, beginning with the Dow Jones Industrial Average. Before I begin, I'd like to say that all the charts you're about to see are 6-month charts from August 22nd, 2017 to February 22nd, 2018. Let's begin with the Dow Jones Industrial Average. We had a high here on January 26th, a rapid sell-off that bottomed out recently on February 8th, and then a bounce. And what we have here is a red 5-day moving average that is below the blue 20-day moving average, indicating short-term weakness. And that 20-day average in blue is moving ever closer to the purple 50-day moving average. And if they cross, that would be an intermediate-term weakness sign as well. But they are all just kind of trending sideways right now. So the most that I can really well, the best thing I can get out of that is just a lot of indecision and no strength. So we'll just have to keep an eye on it. But you will see here, if I draw a line, where the Dow Jones Industrial Average is trying to break through. If I draw a line right here, you will see that from the high to the most recent high of the bounce on February 16th, this declining line is providing resistance. And if I adjust it just a little bit, on the 22nd of February, we're sitting right there. So either we get a breakout above that declining trend line and we start heading higher, or it just stops dead in its tracks, turns right around, and starts to head back down to the February 8th low. We'll have to just watch and see, but it's times like this where you just want to watch and be careful and try to figure out which way this thing is going. Here's the S&P 500, same as the Dow. We had a high on the 26th of January, a low on February 8th, then a bounce. And right now you can see the 5-day average in red and the 20-day average in blue and the 50-day average in purple are all trading sideways. So there is zero direction in the stock market over the last week. Lots of indecision and no strength, just lots of indecision. We need to wait and see where this thing is going to go. And if I draw a declining resistance trend line here from the high to the recent peak on the 16th, you can see that the S&P 500 as of February 22nd is sitting right on that declining resistance line. And this S&P will either have to break above it and start to trend higher, or it's going to get stopped and it's going to get pushed down back toward the lows of February 8th. So we'll just have to wait and see. But right now it is just a lot of indecision. Here's the NASDAQ 100. This one's a little stronger than the other ones based on this chart. We had a high on the 26th of January, a low on the 8th of February, and a much stronger bounce than the Dow and S&P. The 5-day average is back above the blue 20-day moving average, indicating short-term strength. And that 20-day average in blue is above the 50-day and they're not converging. So we have strength on the intermediate term time frame, but it does also indicate some indecision because that blue line and that purple line are trending in parallel. So we'll just have to wait and see what the last week of February and first week of March brings to the NASDAQ 100. But as of right now, it's signaling some strength. Here is the SP 500 Materials stock index. This is full of industrial companies and chemical companies and companies that dig stuff out of the ground. We had a peak here on the 26th of January, bottom on February 8th, and a bounce. And as of right now, we have a little more weakness than the first three charts. We have a situation where the blue 20-day moving average has crossed below the purple 50-day moving average, and we have a 5-day moving average in red below the 20. So 5 below 20 is short-term weakness, meaning hours to days, and that 20 is below the 50-day average, meaning we have weakness on days to weeks. So right now, materials is has zero strength, and we just need to kind of pay close attention to this one because right now it is signaling enough weakness to possibly break down and move lower again toward these February 8th lows. We'll have to just wait and see. Here's the SP 500 Information Technology Index, and this is one of the major drivers of that NASDAQ 100. So you'll notice that this chart and the NASDAQ 100 look very similar. We had a top on the 26th, the low on February 8th, a nice big bounce, pulling that 5-day average in red back above the 20, and the 20 is above the 50. So as of right now, technology has a short-term strength indicator, 5 above 20-day moving average, and intermediate term strength with 20 above the 50. So right now, technology is hanging in there and looking strong. Here is the SP 500 Consumer Staples Stock Index, and it's had a rough week. We had a peak here on January 26th, and then a low there on February 8th. Bounce into a recent peak on February 16th, and then boom, it just gave it all away. So consumer staples on the 21st of February went back down to retest that February 8th low, and it's really struggling. We have that red line here, which is the 5-day average, is pulling away from the 20, indicating short-term weakness and increasing weakness. And that 20-day average in blue is pulling away from the purple 50-day moving average, indicating intermediate term weakness, and that weakness is getting more weak by the day. So there's nothing positive right here about consumer staples. Everything is weak, and it doesn't have any sign of life at this time. Here's the SP 500 Industrials Stock Index, and right now, we just have a lot of indecision. You can see the 5-day average in red, and the 20-day average in blue, and the 50-day moving average in purple are all trading parallel and to the side. So we have made no progress for about a week on the industrials. It's just been a choppy sideways movement. So no strength, no weakness, just a lot of indecision. We need more time to decide where this is going. Here is the SP 500 Utilities Stock Index, and as has been indicated over the last several weeks, the SP 500 Utilities have really had zero strength at all. It's been a very difficult road for this particular index. We had a short-term weakness crossover right here on December 5th, where the 5-day average in red crossed below the blue 20-day average. And then we had an intermediate term weakness indicator here on December 20th, which lines up with about right here on the price. And ever since then, it's just been down, 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 down for utilities. It bottomed out recently on February 8th, got a little bounce here into February 16th. And let's see if what the declining resistance line looks like. If I draw a line here, you'll see this greenish looking line here is the line that's providing a lot of resistance for the utilities. It came down, touched it again, so now we have one point here, 2 points here, and on the 15th of February it came up, touched it, broke it, and then went right back underneath it. That's not a very good sign of strength. This utilities stock index has to get above that declining greenish colored line and make some progress toward the upside. But right now it just tucked right back underneath it on the 22nd of February. So no strength yet for utilities, just pure weakness. Here is the chart of the consumer discretionary. And if I zoom out a little bit, there we go. Okay, so the consumer discretionary stock index was in January our all-star, had a nice rapidly increasing parabolic move starting to go vertical, and it peaked out on January 26th and fell into February 8th, bounced up here to February 15th, and you can see the red 5-day average and the blue 20-day average are now going sideways because this index has gone nowhere for a week, and the 20-day average is still above the 50-day, indicating intermediate term strength still, but those two lines are going parallel, so there is intermediate term indecision as well. So right now we just need more time to see if this consumer discretionary index breaks to the upside or to the down. We just don't have enough information right now. It's just trading sideways. Here is the Dow Jones Financials Stock Index, and a peak here on the 26th of January and a low on the 8th of February, and then a bounce up into February 16th, and then we had a decline on the 20th, 21st, and 22nd. So right now the financials are having a very difficult time. You can see the red 5-day average, the blue 20-day average, and the 50-day average are all trading basically sideways. So lots of indecision, no strength, no weakness, just a lot of uncertainty. We need more time to figure out where this is going. If I do a trend line here and just take a peek and see, draw a line from here and put it about there, that is the line of resistance, or line in the sand if you want to call it that this financial index needs to break above. And if it breaks above that green line, then we might make some progress going back up to the upside. But as of right now, it's stuck under it, and for the last few days it's still been trending lower. So we'll just have to keep an eye on this thing and see where that 5-day average and that 20-day average start to trend over the next week. Right now, lots of indecision. Here is the SP 500 Energy Stock Index. This one looks very weak as well. It had a beautiful run from November 27th all the way up until January 22nd, and then just threw it all away and went all the way back down to where it started. In fact, as of right now, we are sitting, this chart is as of February 21st. This chart is the price of the energy stock index is the same as it was back in the middle of September 2017. So it's been a rough several weeks and months for this one. If I draw kind of a declining trend line here, it needs to get above that and show some sign of actual recovery. But I'll go ahead and delete that and just say that if you look at that 5-day average in red, it's still pointing down pretty steeply, pulling away from the 20-day average, indicating increasing weakness on the short term, and that 20-day average in blue is pulling away from the 50-day average in purple, and that's indicating increasing weakness on the intermediate term as well. So we got lots of problems here on this energy stock index and lots of weakness. Here's the SP 500 Healthcare Stock Index. We had that little bottom here on December 29th, and then the rocket ship to the moon here on January 26th, and then it turned right around and fell right back to Earth again. and that bottomed out most recently on February 8th with a bounce leading into February 16th. On the 20th, 21st, and 22nd, or this chart is as of the 21st, we have couple days here of decline, so very little strength right now. That 5-day average in red is below the 20, indicating short-term weakness, and that 20-day average in blue is just about ready to cross the 50-day average in purple, indicating intermediate-term weakness approaching. So we'll just have to keep an eye on this over the next week or so, but as of right now, it's a lot of indecision, a lot of weakness, and increasing weakness for healthcare. Here's the last chart of the week. We have the Dow Jones Real Estate Stock Index, and no real strength yet for this real estate. We had kind of a plateau up here for several months. I'll just call this the top on November 13th. Tried to make a new high but failed, and then it was just straight down from there, bottoming out on February 8th. We have a bounce here that led into February 16th, but the 20th and the 21st and the 22nd of February have not really helped us much at all. Right now it's still just laying down here in the bottom trying to get a breath. The 5-day average in red is still well below the 20, indicating short-term weakness, and that 20 is far below the 50-day moving average and pulling away, indicating increasing weakness on the intermediate term. We don't have any sign of strength here for real estate yet until that 5-day average in red starts to pull up and head upward. Right now it's just sitting down here in the basement. Thanks again for watching this market update. I hope you found the charts and information useful, help you give you a sense of which direction this market is going. What I can tell you right now is as of the 23rd, we have a significant amount of weakness in the Dow, NASDAQ, S&P, and the Russell 2000 Small Cap Index. So remain vigilant, remain cautious, pay attention, and as one of my mentors once said, always remember that getting back to even is not an investment strategy. So let's take this one day at a time. Let's recognize the weakness in the markets for what it is, and if I need to send you some information, I'll make another video or I'll post it on social media. So in order to do that, please click the subscribe button on the YouTube channel and then click that little bell next to it so that you'll be notified whenever I post a new video. And then go to Facebook, LinkedIn, or Twitter and look up Christensen Wealth Management there and like or follow those pages. Because during the day, if there's something I need to get out to you immediately, I'll post it to those 3 sites first, and then over a day or two, I can always post another video. But Facebook, LinkedIn, or Twitter are essential to communicating quickly and effectively. Well, if everything is just pretty quiet, I'll see you in 7 days. But if we get some volatility and drama, I'll be back sooner. Have a good day, and thanks again for your time. Bye-bye.